Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday market webcast. Okay, daily chart, and you can see the 9-day got involved overnight in Globex. They were able to hold the pre-FOMC price at 43.86, hold the 9-day down there in the 82.83 area, and bring it back in. What we've seen in the last 24 hours are a few trips down into the 43, 40, 35 to 45 type area. And every one of those times, the bulls have defended that area, let them, and lifted it. Bears have let them lift it 20, 30 handles up into the area between 43.74, 43, 86, 88 last night, and then they bring it right back in. So you've got a lot of wide ranges that are getting traded, and the only thing I would say overall is that the bears are certainly running out of time. How many times have we said, well, the bears, they let them lift it off this price, and this price, and then, they got it together and they broke through and they took it down and, it wasn't a problem. Have we ever said that? I've been doing this webcast for about 10 years now. And I'm not sure as words have ever come out of my mouth. And if those words have never come out of my mouth, why would we think they're going to come out of our mouths this time? There are only so many looks they are going to get down there at the 43.40s. And they're going to need to get through and get back down to this 100-day. Or one of these lifts ain't coming back. Now, maybe it just goes to the 50. Maybe it just goes to the 20. But what we've seen time and again over the years is if you go all the way back up there, by then, it's over. Dip buyers are here. They want to go. We're chasing performance. It's all the stuff that the bears just can't even deal with. And we're off and running. So, to the extent the bears continue to push things down, and they're not pushing it down 4 or 5 handles. We're talking about push downs of 20, 30, in some cases 40 handles. And they can't hold the price. So let's look at the hourly chart and see a little more clearly there. Knock it down. Nope. Knock it down. Nope. Knock it down. No. Knock it down. Knock it down. What in the world are you guys doing? You got to finish. You've got to finish. So you had a nice looking little bear flag yesterday that tried to break down and then they bounced it. It was a nice wide range to trade yesterday. It was some really good trading. Walking it up again overnight. You got to finish. How do you finish? New weekly lows. New weekly lows. Nothing else is going to be acceptable. Everything else is a higher low. Everything else. Now, bulls. You don't look so good either. All you're doing is yelling boo at all the scared weak short bunnies down there and making them cover. That's not buying. That's like, watching them scatter when you turn the lights on and they got their hand in the cookie jar. So what do you need to do? You need to get back and start trading stuff with 44s on it. The place where they threw them off on Tuesday, 44.0975, you need to get back up there. In fact, you need to close above there this week. If you do that, then you're going to start to see the lift towards the 20 and the 50, which are sitting up there around 44.36. All that's happening right now is everybody's playing like 20 and 30 handle patty cake, which is great for traders, but very unstable and very unsettling for people that are holding positions and doing stuff like that. They hate this kind of action. Everybody's waiting, but nobody knows what they're waiting for. What are you doing? I'm waiting. For what? I don't know. What are you doing? Well, if you're waiting, I'm waiting. So we'll all just wait. And we'll throw 20 handles at each other back and forth, back and forth. People will take profits. People will do this. People will do that. And, this is going on 3 days now. So if this was in a tighter range, we'd all be going crazy because it would be like, oh, it's compressed, it's consolidation, it's all this stuff. We're not going nuts because it's basically you're getting huge ranges to trade in. But look at the Bollinger Bandwidth. Look at the Bollinger Bandwidth. Sub 1.0 on the hourly chart. We are consolidating. We are consolidating. When you involve the hourly midband or any midband, whether that's on a 5-minute chart, hourly chart, daily chart, whatever it is, when you involve a midband as much as you have over the last 20 periods, in this case an hour, you're going to get tight Bollinger Bands. Everything keeps gravitating back to the middle. All right. Numbers this morning. VWAP. Volume weighted average price 43.74. Proprietary moving average is 43.72. That hourly mid-band we just discussed, 43.67.5. Daily pivot is 59.83. The 9-day, 83. Pre-FOMC price, 86. We've been playing ping pong between 71 and 62 this morning. So that's kind of an area that I'm looking at, although it's 7:55 in the morning as I'm taping this. So we still have some time until we open. All right. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. I'll talk to you soon.